All right, hello guys, and glad to have you on board again. Today we're Wednesday, so we're going to update our flow sequence trading, and today we're going to have a look at some other things regarding silver and stuff like that. So very interesting one to look for. Anyway, without further ado, let's jump in. So I'm looking at the S&P 500 through the 4-hour charts because, of course, remember the actual flow sequence is in the H1 reference. But as this flow sequence has been going on for a while, quite some time, pretty much almost a year now, and therefore, well, I'd rather like to have a look at it through the higher time frame so you get the whole sequence. So remember the first set of 3 flows, then we might be going on for a second set of 3 flows. But there was also the possibility for a bear version of this thing, which we are in here in a potential weekly third range boundary, which could pull itself into another sequence of 3 bearish flows. Okay, so kind of a battle between the bull and the bears, and no one knows who's going to win. Remember, once again, that means that in this equilibrium battle where both bull and bear scenarios tend to validate the rules, you would rather like to trade both, but you can modulate the levels of trades you take, aka the collateral you put into these trades. You can lower the position sizing when you trade against the major trend. Remember, the major trend in the S&P are secular bull markets, so in these areas you'd rather like to slightly buy more than what you sell. That doesn't mean you don't sell, that means you sell with slightly lighter position sizings. Okay? So that's really a TLDR of the things that we have said in the previous podcast. So the sequence of flows in the bear angle and the bear vision of the things would have been 2 flows, and that means the bears now are trying to sell at the Bollinger Band. The Bollinger Band in the H1 time frame. So remember that. This is here we are. I'll give it a second to plot. I've removed prices so you get the real picture of it. So remember, the bears would like to sell this area, the area which we are nearing, though the bears are really looking forward to trade now, okay? So the bears would be trying to sequence the 3rd flow out of this area, okay? Having their stop losses, of course, there. So remember, this is where the bears get stopped out. Okay, if they take this trade, their maximum stop loss is at the previous high point. Okay, so we know for sure that in here the bears would get invalidated. Okay, of course, for now they still haven't touched that area. Remember, we're getting closer and closer, but we're still not yet there. So I think it's going to happen within the near future. So whenever we touch that Bollinger Band, this is where the bears will start to sell. So number one thing you want to be doing in here is to set an alert for this. Okay, you're going to take the S&P 500. Oh, sorry, you're going to take framework, and you're going to say bearish alerts. Okay, so that's really the way it goes. You want to be triggered on any bearish alert. Of course, wait for candle closes, and that would basically be this. Okay, take the sale trade on SPX. That's really basically the way I would do these things. Okay, now I'm going to wait for signals, and if I don't, of course I'm going to wait until the Bollinger Band is traded. Okay, so that's really the way it goes. So I'm going to put in a second alert this time around. I want to see when the prices will cross over the Bollinger Band. Okay, so that's going to be just this. That's going to be volatility resistance. Okay, and that's really the way it goes. Now it's just I want to be alerted at any time when the price reaches out the Bollinger Band. Okay, so that would be okay. Price reaches out Bollinger Band. Look for signals to sell. Okay, so that's really the way it goes. Remember, I can sell blindly at the Bollinger Band. That's the highest risk taking, so I'll probably take a tiny position sizing. If I can get some signals or context detection, that would be, of course, even better. Okay, but that's really the way it goes. If you trade naked, well, don't go cry if you take a stop loss. But I'm definitely willing to go this path. Okay. So that's really the way it goes, waiting for the Bollinger Band to be touched at least, looking for short-term and real-term signals, and on the other hand, also willing to be alerted if for whatever reason I have bearish signals detected by the algorithm in the early stages. So this is how you frame your market. You know what you want to be doing, and you're going to use the actual only reasons why I built those indicators in the first place, not to pretend to be a god, but to actually be able to semi-automatize everything you do in trading. So long as you know what you want to be doing, there's an alert to be set for this. That means instead of looking at real-term charts and consistently looking at an irrelevant price action, you actually know what you want to see and putting an alert for this so that the charts does the job for you, and you get alerted only when something interesting shows up. Okay, so that's basically what it is. This one is of course pending now, so it is not yet available. Okay, it's a pure hypothesis that we're going to have to state. On the other hand, remember, we also have on the higher time frame the possibility for the bulls to set their third flow, and their invalidation will be there. Okay, so you know everything. You know that for the bulls, the goal is to go there and fuck the bears. You know that for the bears, the goal is to go here and to fuck the bulls. So it's really a range battle, and we don't know who's going to win it. All right, so next on, because of course, now remember, uncertainty will be at its highest. One of these camps is going to win, and until there is a clear winner, that means anyway, if you play both sides, it's probably going to end up with a stop loss in the end. But you still make more money by playing both sides, eventually taking a stop loss. But normally the gains of the second position that will still be running will largely cover for the potential loss on the ones you've taken. Okay, so just account for this. The goal is not to try being right and avoid being wrong at all costs. It's just to understand that sometimes being wrong is part of the process. You just can't figure it out. Okay, so play both sides. That's really the way it goes for me in the S&P 500 now. Okay, when it comes to the rest of the market, there are some interesting things that we need to talk about regarding silver. Remember, this one is on very, very larger time frames. We have a flow sequence, but it's on the weekly chart reference. Just for the purpose of this video, I'm going to put back into prices at play in here. But remember the thing in here, that we have large time frame trends, possibly on yearly basis. It's between quarter and year basis, so we knew that the flow sequence would be playing between daily and weekly, and we've also assessed the probability of both of them to be valid, and therefore we're taken for the largest time frame, which is the weekly. Okay, we would have a first flow in here, followed by a delayed third range boundary there. Remember, context to context, rebouncing without making new highs, then breaking the previous low point. So this is really delayed third range boundary. Then you buy at the Bollinger Band, and as you can see, this area has been very widely defended back then. So that's really the way it goes. This is where I heavily bought into silver back then. And then it's just been a very long uncertainty area. Remember, we've rejected the third range boundary. We've gone there, and so far we've tried to consolidate. And it's been very long and painful around these areas. But the end game of it is that, well, we've tried to break down a few weeks before that, trying to break down this $22 support, but all it ended up doing is actually pulling us right back to the rising moving average one more time, and now the bulls have it under control again. What I am mentioning this week is that, as you can see, we have a momentum signal now. It is on the real-time candle, so don't get me wrong, folks, this one isn't yet closed, so don't overthink things. There's still 2 days left to go by, but if it was going to be closing that way, this bull pattern will likely be confirmed. Don't get me wrong, it very likely will. But the thing is that if it really does by next week, that means we have a bull signal on the rising moving average. To me, that will be the sign that the next stop is going to be breaking the previous resistance. Okay, so I'm going to introduce something today out of this that you really need to learn. Okay, so out of your flow sequence, all that you need to know now is that you have a first flow sequence, your third range boundary. So you know one thing: you do nothing until you break the previous high point. This is where you're going to set your stop losses at break even. Okay, you also know another thing: anything you buy for the second flow has a maximum stop loss at the lows. Okay, so that means you put your stop loss wherever you want, but there's not a chance you can put it anywhere beyond the previous low point. Okay, you also know that if the moving average doesn't sustain prices over time and gets broken, then that means we're going for the Bollinger Band. So of course, try to make it rational. If we end up being proven wrong with silver, that means we're headed for $14. So that's kind of a drawdown. Okay, so once again, could happen, but I don't think it will. On the other hand, well, if the moving average makes it, well, that's where the way it goes. We're going to break $30 at some point and install prices at higher stage. You also know that it will last for as long as it can. There's no way for you to control. You are just going to let it behave so long as there is no third range boundary. Okay, so that's really, really the way to go. This long second flow, this second flow can be short, long, extremely long, you don't know. It can also be very impulsive or very mildly oscillating across prices. Okay, you don't have any bit of control over the angle and the duration of this flow. Okay, so just try to follow it accordingly. So the additional thing that I'm going to give you now is the only two sets of rules that you can use inside a flow. Okay, so that means if we were going for a second flow, there are two things you can use on top of the flow sequence. When I'm saying on top, that means the flow sequence must have been cleared first. Okay, you need to know where you are in the potential flows in order to use these two rules that I'm going to give you. And I'm going to give you just one today, okay, just to make it easy on you guys. So if there's anything you can go by inside a flow is this thing, okay? I'm going to remove prices to make it easy. On a flow, okay, in the flow, there are two things. One is volatility on certain standard deviations, and we're going to mention that in the future. The second thing is that the market always go for 1-to-1 ratio. That means if you want to grind your way higher into a flow, there are very limited chances that you will go further than just doubling what you've retraced. So that means the market goes up, it retraces, okay, and then it breaks 2 times above what it done, okay? So when you have these kinds of lines in here that get retraced, and if the prices go back to the intermediate resistance that goes here, you know one thing, the target is generally on a 1-to-1 ratio. Of course, out of this, the market can grind a bit higher, and then it will have to retrace in order to 1-to-1 again. So that's where the way it goes. Remember that flow trades rarely go straight line from point A to point B. They generally have to make drawdowns to double it up. Okay, and that's the one thing. Okay, so one step backward, 2 steps forwards. That's the one it goes. Okay, that's how flow sequence generally tend to play their game. So any retracement you have is generally pulled up against on a 1-to-1 ratio afterwards. Okay, that's the rule you need to listen. And that's the only thing you know. Okay, the flows can do anything they want, but they generally tend to advance on a 1-to-1 ratio reported. Okay, the second thing is volatility, which we'll explain in a further down the line video. Okay, but for today, I think that's more than enough. Okay, when it comes to silver, though, the stage which we're in is that we've had quite some significant retracement. Now back to this moving average once again. That means TLDR 1-to-1 ratio is somewhere around $31. Okay, so this is what could potentially be the next target for silver if and only if it succeeds rebounding out of this area. What the bull signal tends to suggest, if it ends up being confirmed, is that this is very likely going to cause a cycle breakout. That means the bears will be able to break this resistance and go to the target. So I would say the technicals are very favorable now for silver to head toward this $31 mark. That certainly not means the end of the game. That just means we're going to be at the area where the bears will be fucked. Because remember, when we go there, this is where the bulls have won. They will be able to put their stop loss as a break even, and they will be probably able to reinforce, to reinvest positions and stuff like that. So once again, that doesn't mean the bulls will get rich and go to the moon, bro, but that's really just the bulls should win the battle if we succeed maintaining price pressure to the upside out of this area. The deep retracement that we have is going to normally lead us to somewhere around $31. So that's all you need to know. Okay, remember, and this, you don't create new rules out of this. There are really 2 rules that you can use inside a flow. Okay, you will never control timing, you will never control the amplitude. All you know is that every dollar that is retraced will be doubled up when it gets to break the resistance. Of course, you reverse that narrative when it goes for bearish flows. Okay, and the other one is volatility, which we'll mention on the later stage. When it comes to cryptos, if we look at Bitcoin, though this one, remember, is for our chart reference. The flow sequence which we're in is this one. Give it a second to plot. Basically, first flow in here out of this massively oversold cluster, FTX and the like and stuff like that. This was weekly or monthly reference. So remember, we saw this was the H1 to H4, and the H4 validated the first flow sequence in here. Very weird way of building a third range boundary with this expanded wedge. But clear and neat rebounds out of the moving average in here. That would be first to second flow to me. Okay, then of course we wait for the third range boundary. It's been very long this time around. As you can see in here, the third range boundary was very quick and built with this freakingly fucked up structure. The second third range boundary took us nearly 6 months, as you can see, to build the third range boundary in here on a double top, and then going back down to the Bollinger Band, which is where I bought personally for the third flow. Until then, well, I'm just waiting for the same old structure. Remember, the maximum stop loss is at the previous low point. and you don't move your stop losses at break even until you get to break the previous resistance. So same old story here. 31.5 is where I put my stops at break even. Okay, and everything we've gone down is normally doubled up. So for me now, next target for Bitcoin is the 30K mark. And oh, guess what? This is what we've gone by exactly when we've done that stupid upper shadow candle stuff. Okay, so for now, I won't say this is a one battle. All I would say is that despite the good, bad news, fake news, whatever thing, I was expecting prices to go somewhere around 30K anyway, because that's just doubling up on what we've went down. It's just as simple as it is, okay? You really, really want to understand these things. I don't overthink things in flows. The only thing I know is that if you try to pull us down, I will double it up the next time, okay? And that's how flows generally move forward. So until then, well, I'm not surprised, fake news or not, I think we have some decent chances to keep grinding all way higher. On the other hand, of course, if the bears wants to get it over with, they need to pull the bears, they need to pull prices down to 20K. And I don't know who's going to win that battle once again. I actually don't nearly give a fuck. I just know where I will act according to what the prices give me. Okay, and until then, I see some people in social medias just telling this will happen or that will happen, and just, oh man, just drop it. Okay? Ethereum, on the other hand, has a slightly different structure, but pretty much as pretty much the same underlying structure. It just pulls prices slightly differently. Big long-term bottom, liquidation stuff, you know the drill. First flow in here, third range boundary there, moving average there. That means first flow, second flow is at play. Same thing in here. Delayed third range boundary has been in here. It hasn't been traded and broken so far. It's been rejected another time in here. So we're still in the same consolidation range until then. Big fat fucking range, very long. Same thing, more than 6 months consolidation into this thing. Very long. But once again, remember, anytime you say, hey, it takes too long, or it's too quick, or it's too this or that, well, that means you're getting fucked by the brokers. So in here, yeah, it's long, it's painful, but yeah, I mean, who knows? All you know is that if this thing goes 1375, then that means you are really going to take your stop losses, whether you like it or not. On the other hand, well, you do nothing until it goes to 2000. And you let the DOM stop. Yeah, I know everybody now saying, yeah, Ethereum is underperforming. The alt season is not going to happen. All the traders are going to get destroyed and stuff like that. Yeah, get me Ethereum to 1377 and I will be agreed with that. On the other hand, oh boy, if we start to break a resistance, you know what's going to happen. That's the same old story. We're going to go for the same old 1-to-1 ratios, and it's going to be an endless pain trade for the bears. So until then, like I said, I'm not anticipating the future. All I'm knowing is what exactly I'm going to be doing in both cases. And that's just as simple as it is to me. I'll let the other ones talk on social medias. If it ends up with a stop loss, well, I'm going to take it. I mean, clearly, I'm going to take it. I'm not going to fight against the market. All I'm saying is, well, if we go there, well, once again, good luck for the bears. They're going to be pen traded. Though that's where it goes. I think normally, statistically speaking, odds are in favor of the bulls. And that doesn't mean these odds are 100% chances for us to win. So it's just the way it goes. If it ends up with a stop loss, I'll take it. And we also mentioned that there is a slight possibility in which Ethereum would be invalidated, but not Bitcoin. It doesn't really make much more sense to me, but I mean, some people tend to say Ethereum is going to $500. God knows if they're going to be true. Until then, well, like I said, prices will dictate the rules. And until then, yes, Ethereum is underperforming Bitcoin, but it hasn't invalidated anything. So that's the same old story. If Ethereum is the laggard, but it ends up re-accelerating, because remember, you don't control the shape of this. So now Bitcoin could go slow and Ethereum could go wild in this potential third flow. So once again, just don't try to tell a story until it's ended. So that's really the way it goes, okay? Until then, let the DOM talk. Just trade what you see. Don't try to overthink things. Sometimes you'll take stop losses. Just take them and move to the next trade. That's really the way it goes. See you guys next week.